Hi there.
Well, good afternoon, everyone. Welcome once again to another KoreSummit webinar series 2021. Today, we are going to have a great discussion. This is one of my favorites. Why? Because I don't know anything. So, I get to ask all the stuff that I don't know. You didn't know that, right? So it's going to be a lot of fun. As always, we are, especially when all our hairs are being yanked everywhere by everyone, right? We're going to talk about this wonderful discussion. But before we do, I think it's important for everyone today to meet our guests, two great panelists that have been here with us before, but it's always great. Let's start with you, Sarah. Please take a moment, introduce yourself.
Hey, Sarah Hanks. I'm CEO of CrowdCheck Inc. and managing partner of CrowdCheck Law. And together the two provide a wide range of legal, due diligence, disclosure, filing and compliance services for all forms of online capital formation.
Thank you. Sherry.
Hi, I'm Sherry Noonan. I'm the CEO of Rialto Markets. Rialto Markets is a FINRA registered broker-dealer and alternative trading system, providing primary and secondary services for the private markets.
Wow, that was right, boom, spunky. Let's go. This is it. This is the topic. Blue sky. Look at that. Hey, everybody looks outside. Yes, it is. It's March. Spring is in the air, so blue skies it is. And so we're gonna take this discussion in three different parallels. So number one, to what is blue sky, and then we're going to talk about how it affects primary, and then of course, Sherry, how it affects secondary. Right? That's the big discussion that people are finally going to. So, for everyone, Sarah, since you are the one that we all go to, I'm surprised we don't call you the Oracle yet, but okay. Let's,
Please don't.
I know it'd be like Matrix. Please, if you could provide us an overview of the.
Okay, so when we talk about blue sky, we are talking about state securities laws. And back in, I just want to give a bit of like ancient history from when I was a very, very baby associate at a law firm. Back in the very, very olden days, it used to be that if you were doing an IPO, you would need to register with the SEC and then also go through the 50 states, and you do a 50 state survey and have to get sign off in every single state. That changed back in 1996 with some revisions to the laws, and then people started to just kind of ignore blue sky, and it only became a really relevant in the completely private markets and Regulation D. Regulation D, the big the most used offerings there. Also preemption for 506 Rule 506 offerings, and so it became a sort of like little tiny backwater that was just practiced by specialty lawyers. Then we get Regulation A and Regulation CF, because there's blue sky considerations there, and suddenly it becomes a bigger issue again. Just wanted to give you an overview of there are 5 areas where blue sky impacts online capital formation. The first one, obviously, is Tier 1 of Regulation A. In Tier 1 of Regulation A, you have a much lighter lift at the SEC. This is for offerings up to $20 million. But you file and get reviewed by not just the SEC, but every state that you are offering in. And some of those rules are really, some of the requirements of the states are really very extensive. So for example, if you want to sell in some states who are merit regulation states, so the difference between merit regulation and full disclosure is in merit regulation, they look at your offering to say, is this good enough to sell in our state? Like, for example, Massachusetts looked at Apple way back when and said, oh, no, you're much too risky, can't sell here. And that was for their IPO. But that's the sort of thing you get with merit regulation. Very strong investor protection, but to the extent that sometimes it is not possible to offer in some states. For example, if the state requires independent directors and you can't get anybody to be an independent director in your company. So I've done Reg A Tier 1, not recommending it. I mean, the state regulators did try really, really hard to work with us, but compared to a Tier 2 lift, much, much, much more burdensome.
Sarah,
so
yep. Just sorry, you said something, and I just want to be clear. But when you're talking about cumbersome, we're talking about when the company's doing the primary capital raise, right?
Yes.
Okay, no problem. Please go.
Yeah. So this is all primary. The first 4 things I'm going to talk about are primary. So that's Tier 1. Tier 2 of Regulation A, again, primary issuance. The states are preempted from review, but a couple of things. Number one, they still have oversight over anti-fraud. And so we have had situations where we've done a Tier 2 offering where you're not supposed to be reviewed by the various states, and the states have approached us and said, you know what, you didn't disclose this thing. And it's very frequently something to do with the background of one of the principals of the company, because what they do is they see these filings go through and they do a little bit of Google searching. And if they find that somebody is going to be offering in their state and has not confessed to being not necessarily a bad actor, because a bad actor is completely disqualified, but if they have some kind of history, we've seen a couple of states, and Arkansas pays a lot of attention to this. So there's, different states have different specialties, but the states are not asleep. They are paying attention to this. So they have anti-fraud jurisdiction if they think somebody is acting fraudulently. And then they also have state notice filings. I think it's something like 38, 40 of the states have state notice filings. The great thing recently is now we can do online filings for some of those. It's been great. We don't have to stuff envelopes anymore. But the price you pay for the preemption of state review is they can require you to make a notice filing saying we're selling in your state, and then you pay a fee. And those fees can range they can be fixed fees, they can be variable fees like 1/40 of 1% of the amount you're seeking. But pay attention to the amount that you have filed for, because the states that have various variable state filings, Texas is one. There's lots of investors in Texas. If you originally file for $100,000 in Texas, if you've sold $150,000 in Texas, you need to update your Texas state notice filing. So that's Tier 2, anti-fraud and state notice filings. Third thing I wanted to mention was issuer dealer rules. If you are not using a broker like Rialto, there are some states that you need to register yourself as an issuer dealer. And as of today, those are Florida, Texas, North Dakota, and Arizona. Any moment now, we're going to drop Arizona off that list because we're waiting for the governor to sign a new piece of legislation that a crowdfunding fan pushed through that's going to make it easier in Arizona. But if you do issue a dealer, you've got to deal with Texas, Florida, and it's not a meaningless thing. You do have to actually apply. For Florida, you need fingerprinted. So make sure that if you're not using a broker, that you comply with issuer dealer rules. Fourth thing, still primary, Regulation CF. Everybody's like, huh? No, it's the rules were completely preempted of the states. Not exactly, because if you sell more than half of your securities in a state, or if you're from a state, they can require a state notice filing. Shout out to Ohio. If you are from Ohio, they are expecting a Reg CF company to be filing a state notice filing. And then the final thing, switching over to secondary, all of the preemptions that I mentioned before were for the primary offering, the Reg D or the Reg CF or the Reg A. There is no preemption for secondary trades under state securities law. So if you want to be trading, you are going to need to have an exemption from state law for every single trade that you do, buyer and seller, every single state. So those are the 5 areas where state securities laws still really, really relevant to the new online world.
What, I learned a lot. I'm joking. Thank goodness we're recording this. I'm gonna, make that into a blog for everybody. What an eye opener, right? Seriously, I mean, we take it for granted that we go to lawyers and, oh yeah, don't worry, we'll take care of it. But what exactly is being taken care of? I think it's important. And we've been emphasizing primary. Get it in your head. It's just the first phase. There are 2 phases. The second part is the investor has the security. Now they want trading. And boy, we're walking into it right now. So in all of them, everything you said does not apply now. So now we're talking about blue sky really does have an effect. And can we cover some areas, I guess, from your perspective, Sherry, because, I mean, you're the secondary market, right? Mm-hmm. So without that, I don't even know where to start. So where now that you have to follow every state, how does Sherry protect herself? How does the secondary market know that I did it? How does the secondary, how does that happen?
I'm going to make this very, very easy.
Good.
We use the service, and that provides for all of the filings. So trade check, right? But the issuers use a service that do all of the blue sky filings. But really, that's the most efficient, easy way to handle all of the blue sky requirements.
So to make sure that you're covered in all 50 states, and then Sarah, coming back to you on this, what is considered a trade? We know this. There are companies who, I created an intranet. I invite all my shareholders to go in there, and I let Sherry go in and sell. Is that a secondary market trade? Mm-hmm. What that is a secondary?
Yeah, I mean, to go back to the absolute fundamentals of securities law, every single offer or sale of a security must be registered or exempt at both the federal and state level. And when I was teaching securities law to baby lawyers way back, I mean, I'd have to keep coming back to that principle. That is Section 5 of the Securities Act and the equivalent at the state level. That is, if you're trading on Robinhood, I'm buying GameStop or some damn thing, what am I doing? You're in that case, you're actually relying, although you don't know it, on Section 4A1 of the Securities Act, which is the one that says, if a security is traded by someone who's not the issuer, underwriter, or dealer, that's what you on Robinhood are relying on. But the fundamental doesn't change. Every single offer and sale of a security must be registered or exempt under federal and state laws.
So so it's needless to say that what has happened, we all know that in most cases, most people have not done that. Is there a major consequence? It's no different than breaching SEC rules, right?
Well, I mean, in the case of Robinhood, for example, your average, your trader down in his mom's basement who's trading these securities, he's not violating anything because the company is listed. GameStop, I'm not sure, but if they're on the NASDAQ or New York Stock Exchange, you've got an exemption for that, and that's what he's relying on, even though he doesn't know it. And that's right. I mean, he shouldn't have to bother about that. But then when you come to privately placed securities, it is a little bit more, case by case. because some companies are on OTC and some companies just do Reg A, and so anyone who's selling should be thinking to themselves, I'm going to trade. How do I know that I'm not violating any securities laws here?
Yeah,
I will trade on Rialto. That's what I'll do.
well, and that's why I brought Sherry to this discussion. People go, why not just upload? Because this is a real life example, and I'm gonna putting you in the hot water, sizzling. I mean, I already know a few companies. I'm counting them on my hands. What you just said and what they don't have, we already know. Obviously, the report that Sherry you're alluding to is the trade check report that covers all 50 states. But let's talk about secondary market trading. I mean, now everybody's talking about it. These are the things that nobody has ever brought up. In none of the discussion, nobody's talking about blue sky, the importance of it. What does it really mean? From like the everyday investor just wants to sell their shares, right? They have no way of knowing. So what's Rialto doing that with the issuer to make sure that onboarding is done correctly to Sarah's point?
I mean, it's really simple. Every issuer that comes on as part of the requirements, they go through trade check, and so we know that they've met all of their blue sky requirements. And I think it's really important. I just wanted to kind of rewind and emphasize something that Sarah mentioned. If we rewind maybe 15 years ago and think about what the world looked like, it really was the trading markets, or the markets really were NASDAQ and New York Stock Exchange. And so people really looked at those and said, well, there's an exemption for those for blue sky. And now we've got this sort of grassroots growth of all these other things that have been that have been around, but really have been not looked at, but it's sort of an explosion because of a confluence of events. But there's no framework. And so we've really tried to put a framework together to make sure that anyone coming on our system, that comes with the price of admission, so that it's not, oh, you can come on and we'll figure out what states you can be in. No, you're in all 50 states. This is the price of admission. This is how it works, because otherwise you won't be able to manage it effectively, and you're going to do a disservice to your issuers and to your subscribers.
Yeah, that is the key, right, Sherry? It's like the internet. How do you put gates around where there's no borders? Now you're saying, oh, you only operate in 5 states. Well, it's hard to transact that way.
Exactly. And there's going to be every error I ever dealt with on a trading desk was because, someone agreed to some manual process, someone agreed to something, a long time ago. Not every error, many errors. And, you forgot about it. Something was done off the system. Something was done. If everything, comes in a standardized format, it makes it that much easier to make sure you've created a framework within which it can get processed appropriately.
And I think I would like to add that I think part of the reason why we're all having this discussion is that blockchain in itself, when it first came out with the ICO, it elevated, it expedited it. We've been so busy trying to educate people on the primary, which now people are understanding. Now they're all getting excited about the secondary. But again, a lot of people are overlooking the part that even with secondary, there's still additional steps that need to be dealt with, as Sarah alluded to. So there is one question I have. US is not just 50 states, right? There is more than 50 states.
Yeah.
Can you elaborate on that? Like, obviously, yeah. Can you give us some background on that?
Yeah, there's a few territories as well, plus DC. Luckily, most of them, none of the non-states are particularly problematic, if I could summarize it that way. Most states follow the same kind of patterns in any case. And so, the exemptions that, Sherry talked about our trade check product, the exemptions that we're looking at primarily are you reporting with the SEC? Well, that's a bunch of states. Are you in one of the securities manuals? Okay, bunch of others. A few outliers like Tennessee and California. California, of course, always an outlier. That one you have to actually go and do an actual filing for. But the non-states, I can't think of any of them that are problematic. Bless them.
So so you brought up another term in there, securities manual, and well, we're gonna see. The industry knows all the lingos. The general public is lost, right? I mean, so the secondary market. The way you're going to operate, the way you are operating, Sherry, is you're onboarding the companies that use these regulations, either Reg A, Reg B, Reg CF, these are the private exemptions to allow them to provide their investors a way to monetize. You're an off-ramp venue for that. And one of the onboarding is going through this using the trade check, and that covers all the states. But how do you know I did it? How do you, I mean, look, it's like anything else. It's great that I got the trade check report. How do I know? How does I'm going to play the skeptic in this crowd, because this is the thing that's happening right now. There's too much information. It's coming at people, and people go, how do I know? So if it's a regulated thing, I don't want to touch anything how do I take your word for it? There's a trade check. What's the other? And she mentioned securities manual. Is that something that's available to the public for everybody to know?
Do you want to talk about the securities manual, Emergent?
Oh, yeah. Let's dig into it. Come on.
So there are securities manuals, and I mean, now I think there were probably more in the past, and I know there were more in the past, and now it's sort of winnowed down to one in particular. It's called Emergent, and it's a securities manual, and you can go and have your security placed there for a fee. And Sarah, I'm going to have you expand on that.
Yeah, that's basically it. I mean, really, it's just like, a telephone directory, and I assume that it's still available in paper form in some universe, but it literally used to be, you'd look it up. The brokers would have to look up to see if there's information there, and basically it is, here is the basics of the information about the company. This is where they are. This is who the directors are. Here's the extracted information of the various pieces of financial information, your balance sheet, free cash flow, that kind of thing. All of that packaged up in standardized form and stuck in a book, which is now, of course, online. Is anybody ever going to look at that? Nope. The only people who are the compliance officers of the various brokers and ATSs who are going to make sure that something is in the manual. And that's one of the things that TradeCheck does, is for the states that have a securities manual requirement, it's in there. We put that information there. And the retail investor, where do they look for information? Well, it's not going to be there, really. It's going to be, if they're a little bit sophisticated, they're probably going to look on Edgar, which is where the more fulsome filings are, not just what is our balance sheet.
Sorry, we're suggesting. Sorry, I have to interject. We're suggesting retail investors are going to go there.
Well,
to Edgar?
I mean, that's a really good point. It's more likely that they'll go to Edgar than they'll go to the securities manual. And yeah, okay, stop laughing. It's just,
please.
The SEC would love it if people did actually go to Edgar more. It's not a very user-friendly system, for one thing. Also, I just found out if when you originally filed on the SEC's Edgar system, somebody put a period in the wrong place in the company's name, you've got to know that typo is part of the company's official Edgar name, because otherwise you're never going to find that company. It's not a forgiving system. Ideally, the SEC would love it if a retail investor would not just look at the offering page on one of these securities platforms, but would go to Edgar and actually read the 1Ks and the 1As and the 1SAs and the 1Us. Yeah, I'm living in a fantasy world, right?
Yeah, no. Look, I'm not mocking Edgar. I'm not mocking. It's just that the reality is that we know that's not going to happen. They're not even clicking on the 1As right now to go there because they get scared the minute, because the way they lay it out, you don't know what the heck you're clicking on. It's even though it's a safe website, but it does bring up the issue, though. I mean, obviously, the regulator shouldn't punish the everyday investor because they bought something legally. They're trying to sell it to another person legally. It's not their responsibility to know whether the company has done this, but there has to be a visibility. And obviously, for this is what's really great about Rialto, I think, from the general public point of view, is you are that visibility to bring both the trade check report, the securities manual component to it, rather than them trying to buy it privately from someone else, which has been the way it's been done now. I'm suspecting that's the way it is, or these intranets that companies are building to allow their shareholders to sell their shares. You're doing something fully compliant, so there is no reversal of fortunes going on, correct?
That's correct.
Okay, so how impactful for you then can Blue Sky be if the industry doesn't even understand it? So I'm going to throw both a wrench for both of you. I got into an argument with a lawyer that says that no, you don't have to worry about it with Reg 1A Tier 2. We don't need that. I have a client right now. I recommend that they use an intranet and they're trading. Everything you just said just now today contradicts all of that. So where is the missing link here from you, Sherry, and then I'll go to Sarah?
Well, I'm sure Sarah has a better point of view. From my vantage point, I encounter this quite a bit from issuers and others. And, I can just pass on the information. I think there's really, from a macro perspective, what's been happening in finance over the past, I don't know how many years, but there's sort of been this, amazing sea change. And some of it, when you think about, some of the things that have come up have been blatantly, I want to be out of the regulatory regime. I want to be outside of the regulatory regime and outside of this box. And we understand that. However, I think there are some people that say, I want to be in the regulatory box, but they don't understand the nuances of the regulatory box well enough. And so they're just missing some key points. So I think it's really about understanding the details really, really well. And I think that's what's missing, is there's just been so much activity in this space across several different sectors. And now I'll let Sarah go.
Well, okay. All right. I'll ask you, please, Sarah.
Okay. Yeah, I totally agree with Sherry. I mean, one of the interesting things when Reg A in its current form went into effect in 2015 is, we had some debates along these lines where some lawyers were saying, no, preemption's complete. Preemption is preemption not just for the offering, but also the people doing the offering. Broker-dealer laws, not the issuer-dealer stuff that I discussed. And then some of them would take that next step and say also for the secondary trading. And we'd have this debate about, no, really don't think that's true. But in the end, it's not what Sarah says that actually matters. It's totally irrelevant. It's what the states say. And if the states say, you are not exempt, the person doing the offering is not exempt, then those are the people who are going to sue you. I have no power in this, but Texas does, and don't mess with Texas. So there have been those debates, and I think we might see the states, especially with the increases in the offering limits under Reg CF and Reg A. I think the states are going to pay more attention to this in general. And I think we will see some enforcement. I think we're probably going to see a different regime over at the SEC. I think we're going to see more enforcement of the rules that are kind of being ignored. But I would expect that we'll see more coming from the states too.
And Okay, so I understand people having different points of view. I mean, the three of us can be in a room having a discussion about something. You see yellow, I see red, Sherry sees orange because she's in Florida, right? So, I mean, we all see different. I get that. But if the rule says that's purple, it's purple. It doesn't matter what we see. So what I'm missing here is that, as you just said, the state's clearly outlining. So let me ask you this. Is there no fear? Is that what it is? I mean, I maybe I'm putting you under the hot seat right now, but I'm trying to figure out why. Because as to Sherry's point, Sherry and I are dealing with this, right? You and I are dealing with this misinformation right now, where we're trying to tell people, and we're saying, no, no, no. My lawyer said I'm okay with it. You know, there's nothing to worry about it. I can have secondary. In fact, I'm going to build a little intranet here, like a Craigslist, and I'm going. Are you kidding me? So what am I missing here? So that they can't be. There's no fear to the penalty, right? Is that what it is?
But I think we really are going to have to see the state step in and do this this enforcement. But I think we'll also see the talking about the bulletin boards and their own little internets. That there's a very important development that I think that people need to be aware of, which is. To give again some more ancient history here, for a couple of decades, the American Bar Association has been asking the SEC for guidance as to what it means to be a broker-dealer, what it means also to be an ATS, under what circumstances are those regulations triggered. And there has, the guidance has been very piecemeal. There's a no action letter here saying if you do that, we won't take action. But that happens very rarely. There's been a few quasi-investment enforcement investigations that haven't really gone anywhere, where the enforcement division folded. But alongside the constant request by lawyers for guidance as to what it means to be a broker-dealer, we're seeing the SEC actually come out with some guidance there. And I've seen it reading between the lines and sometimes explicitly. Late last year, the commission came out with a proposal for an exemption for finders. And that's basically the dude at the golf course who knows some other guys and they have some money and he can introduce them, but he wants a piece of the take. And that's been happening forever at every country club in the country. And that's, in many cases violative, because if he's taking a piece of the take, that's actually broker-dealer activities. He's introducing people. So the SEC said, okay, let's try and regulate this. We're making a proposal that people in these circumstances don't need to register if they follow these rules. That only applies to the dude at the country club. But when you look at the discussion that they put into that release, it talks not just about a guy who takes a piece of the take, but also people who are soliciting. And soliciting can just be online, anyone who's online. So to bring this back to the bulletin boards and all of those things, I think that we are going to see a lot more enforcement by the broker-dealer guys over at the SEC with respect to unregulated, non-broker online platforms in general, and online trading forums in particular.
Okay, so
there's going to be
the SEC can step in, because look, the reason I brought Sherry into it, because blue sky matters to both of us, right? We're trying to educate the market, and I feel like I got it, but I also feel like there's still this gray, and I don't want to. I always thought things shouldn't be as gray as they are, but this one seems to be a big gray one, and I'm trying to make sure that we should never get to the point where we get a regulator to enforce it, right? I mean, I think it's pretty pathetic in this day and age that you got to wait for that for people. So, but Sherry, I mean, for Rialto markets, the trying to get companies to understand this, even though if you tell them about the trade check report, How are you overcoming that objection? Or are you overcoming it? Is it getting to the point that they understand? Is it their legal counsel? Or is it just them that they want to go out the grid? I'm just curious.
We explain it as it's a cost of doing business. It's a cost of being on the platform.
Okay. Oh, I see. So it's a non-starter. It's not, forget about whether it's regulated or not. It's just the cost of doing, here's what the requirements are for us. You want to be in this venue to off-ramp your investors to monetize. This is what you require. You need the trade check report, which will provide the blanket. And okay. So that's really the key here is, so I guess that's one way to begin it. But at the same time, we're trying to stimulate others who already have the market. If they're set in their ways, they're set in their ways. I guess that's really what it comes down to, right?
And I think that's the challenge is changing someone's mind about, changing their workflow, changing their behavior once they're already doing something. But from our perspective, this is a gating factor to coming on to, it's a prerequisite to come onto the ATS.
Okay, so let's talk about your ATS for a moment. So I tried to get Joel to do it last time. He missed the layup. You ever been you would know basketball, right? He missed the layup completely.
Well, hopefully I don't miss the layup. Let's see.
Yeah. Because we had Linda Lerner on the webinar. So he goes, let's have Linda answer it. So you know what we need to do is get Linda and Sarah together. Now there's a food. But onboard us. Walk us through the client side and then the investor. This is the one that I want to highlight, the investor, but go through the issuer part first, because the audience, blue skies, people, I'll get my lawyer to deal with it. Why does it matter? Because it's you. I want to trade. I want to be able to be placed on your secondary market.
Mm-hmm. So you want me to walk you through the process? Absolutely. So you can be onboarded a variety of different ways. You walk through KYC AML. You can go through that either on the primary issuance side when you first invest, if Rialto is either the primary broker of record, or we have a partnership with the primary broker of record, or for example, it's a KCX security or issuer. So there are a variety of different ways that you can go through that initial KYC AML, but we need to process that. If you're coming in fresh, sort of off the street, which we don't really do that. We're taking people in through pipelines right now. So you would go through a very traditional, like you see at many of the other broker-dealer websites, that KYC AML process. You get verified, you get your banking relationship established. You come in, you can see your holdings, all of the securities that are held with you. Accounts need to be pre-funded. So prior to making any buy transaction, you actually need to have the money sitting in the account. You put your orders in. It's very similar to a traditional, think E-Trade, think other types of traditional easy order entry ticket. You need to put a limit on your order, put the order in, and you can trade. Issuer, do you want me to go through issuer? Was that what you were looking for?
Actually, you guys haven't played basketball in a while, but that's okay. You've been in hibernation in Florida. I mean, how often do you get to the ocean? I've been stuck in this, 3x3. So, it'll go like this. No, I mean, I know I'm trying to make some fun of it, but I've learned something new about ATSs. I've learned by asking questions like this, it's the little things that people don't say, and it's that detail. One thing that I learned that makes Rialto different is that Sarah Hanks, if the issuer has been onboarded with you, so correct me if I'm wrong here, Sarah Hanks can go directly to your platform, directly, without a broker-dealer, and go and place her securities or buy her securities on her own, correct?
A retail investor.
The retail investor.
Absolutely.
Okay, I know. See, that's a big thing. And I'll tell you why it's a big thing. See, There you go. You're catching on. It's a big thing because everybody thinks all the ATSs operate this way. They do not. They operate. So if Sarah wanted to go to another ATS, this ATS is also for, they say it's for retail, but it's, you need to go through, Sarah first needs to find a broker dealer who then she gives instructions to the broker dealer to then make her trade for her and then coming back down.
No,
In
so,
yours,
yeah, so for ours, hand me the ball again, for ours, all you do is you go on to you go onto the Rialto site, you sign up for an account, go through KYC AML, link your bank account, and you've got an account. Ball back to you.
wow, you guys were almost thinking it's Monday or something like that, right?
Yeah.
No, do you know what the last few days I'm going back to a little book that I have, is that whenever you think you're getting ahead, you go back to the beginning and you go, don't forget, you got to do it all over again. And you know what okay, so what I do here is that whenever I think that everybody should know, they don't. And what you have at Rialto is so unique. I'm not kidding you. I know you're because you're deep inside, like I am in our business. We get caught, but the fact that an investor can go directly there and you're going to take care of all these components of Blue Sky for the issuer to make sure that they met all their requirements. It's the price of admission to be part of the Rialto platform. It is a fully compliant way of off-ramping for investors to monetize. Do you see what I mean?
Absolutely. But I mean, from my seat, having done this for 20 whatever years, it's not, yes, it's Blue Sky compliant, but it's also, ATS compliant, risk checks, everything. It's the infrastructure needed that does not exist in the private markets, which is what I get so excited about. The ability to give people, the public, access at scale to private investments, and the ability to monetize those private investments, and the ability for issuers to engage in capital formation in very different ways and lower that cost of capital, because by offering a monetization mechanism, that's going to lower the cost of capital. That's, to me, where everything comes together.
No, agree. I'm still a baby steps over here, right? Getting them to here. I've been asked a lot lately. Somebody asked me the other day, goes, Oscar, what's with all these ATSs? What's the difference? And I said, well, it's a really simple question. How do you want your shareholders to be onboarded to a platform? And he goes, what do you mean? Well, would you like them to go directly? And he goes, I thought they all did that. See, isn't that interesting? That was their first response. And I said, no, there is another. And I said, this is what you need to ask that. A lot of them didn't even know that little fine print in the middle, that layer, which there's nothing wrong with it. Believe me, I don't think it's an issue of right or wrong. There's a different place, but it does make a difference because, again, we want to remove all this ambiguity or what people think something is. Just like we were saying earlier, people think that we can trade, and we're just finding out now that you got to file in the States. For Blue Sky. So got to make sure that not only you did it for primary, you got to do it for secondary. So this is where I just go back to the basics. I know that you and Joel have years of experience building ATSs, but the way I look at it is there's 233 million Americans that never even knew what an ATS was.
Yeah.
There's 233 million Americans that didn't even know what primary capital raising is. There's 233 million Americans that go, you mean I can trade them? Wow. You mean just like New York Stock Exchange? See, now comes that's the excitement of this discussion. This Blue Sky is really, this kind of discussion today was kind of twofold, is to make everyone aware from a legal perspective what it is, why it matters. And yes, it can be dealt with, but you need to deal with it. And then, of course, there's Rialto. I want to be able to place my company there. And you're saying, this is the price of admission. It needs to be included, and you're providing that as a complete package, correct?
That's correct.
So this is the intent of what's happening in the market. We can't overlook that. The latest stats, I don't know if you guys knew this, there's only 1.5 million Americans that have gone through Reg CF and Reg A. I know out of 233 million Americans. Now, the other day, one of the guests corrected me. They go, Oscar, no, that's incorrect. There's not 233 million Americans. There's 20-something million households. So you guys have done really good. And I go, but I said 18 or older. They don't just want to get the dad, they want to get the mom and the son. They want everybody to come and invest, right? But it's really interesting. So I'll go to you, Sarah, first. Somebody there has got their hand up. I think they had a question. But what other advice could you give to Blue Sky that we haven't asked? And I'm going to ask you the same thing, Sherry, from your perspective a second there. What is it that we're not asking right now? What could we teach clients to ask?
It's a really good question, because of course, the presumption is that if a company comes to us to do a Reg A or even a Reg CF, we've got that sorted for them. And so we have all of these guidelines and memos and things about what you can do and what you can say and who you have to file things with. So really, if somebody comes, so yeah, basically come to CrowdCheck, because we'll sort it all out for you. That's the only answer I've got, because we deal with the issuers. We're not dealing with the investors. It's just if you come to us, we are going to make sure you are compliant, even if you didn't know that was the thing you had to be compliant with.
Yeah.
Okay.
And I'll just add on, and actually it's funny because my last words were going to be in much the same vein. In topics like this, you can really get down into the weeds and into a lot of detail, but really at a higher level, it's very nuanced and really, really complicated and complex. So you need to focus on finding the right advisors, and so it's really about asking questions to find the right advisors and finding the right service providers. And once you've done that, then you should trust that it's covered, and make sure you're asking the right questions.
Well, but okay, I'm going to challenge you on that. Sorry, because like I said, that's exactly what and they're going. My lawyer gave me that advice. So, I mean, what is right advisor? I don't know where this is going to take us. I know, Sherry, you and I've had a discussion. Maybe we need to expand on this, right? But there's got to be somewhere. Please.
I would, the last thing I said was ask the right questions, definitely interview more than one lawyer and definitely make sure you're working with a lawyer that's done many, many, many of these. So, I think Sarah's firm's done what, 50% of these.
It's actually a 15% market share, but I'll go with it. 83 qualified so far.
Okay, you've done well
more than
over.
anyone.
So you've done a massive, massive amount of these, and so make sure that you're going with a service provider and a professional service firm that is well steeped in these issues and is not doing this as an ancillary business, and is sort of doing this as a, why don't we try this out? This sounds like a neat thing to get into.
Yeah, no, I do agree with that. I mean, we grill people on the primary, but this is different. This is now affecting on the secondary. So the questions we need to get people to ask is, when you ask about Blue Sky, is you preface it. On the primary, it's taken care of. On the secondary, this is where we.
On the secondary, I would ask if the issuers, if one, interview more than one ATS, and as you do, ask the question if all of the issuers are going to be required to have that covered, and if not, how they're going to account for, how they're going to handle it. And if they say they're going to handle it through some sort of technology, I just, that's a problem. I would think that's a problem that I don't know if as an issuer I would be comfortable with.
Yeah,
Sure.
no,
And if they look at you like they don't know what you're talking about, then you can.
no, I actually, it's been some of the ones, Sherry, you and I have spoken to, I've gone back to them with this and they're like, but the important thing is I'm wondering where, like, this is a starting point. We're having this discussion. I've actually, I don't know if you guys know, I Googled everything regarding Blue Sky, where there's been kind of a course around, not a course, but anything around it. Nothing's out there. There's been stuff that's starting to come out now, but it's so legalese that the average person will go, my lawyer handles that. See, my lawyer handles that. And this is not meant, this is to educate the issuer. So ask the right questions to the people that have been there, done that. Sarah, one question I'm going to throw at you. I mean, you've done a lot of the Reg As. So one of the questions now going to be, do you plan to allow your investors to off-ramp? And if so, you need this. Is that coming up now, part of the kit of the Reg A or Reg CF? Or is that going to be something that they're going to wait till later?
It really depends. I mean, one of the things that you do want to say in the 1A that you file with the SEC, in your plan of distribution, if you are planning to list on NASDAQ, be quoted on OTC, or seek an ATS listing, you want to say something along the lines of, we're planning to do that. What we usually end up with, because the market is still so new and not everybody has worked out what they exactly want, is that we usually have some disclosure along the lines of we are discussing whether or not to seek an ATS quotation. There can be no assurance that there will be any liquidity, and then just have some kind of disclosure along those lines. When it becomes more usual to do that, then I think that disclosure will get kind of expanded. But of course, one of the things to sort of go back to the beginning, some companies are just not ready for their securities to be traded. And especially if you have gone out with what we call an optimistic valuation, shall we say. One of the things they're worried about is if people really do, if there is a significant secondary market trading, people are going to look and say, well, it's not worth $5, I'll bid $2.50, and if somebody's desperate, they might take it. And now you've created a ceiling for any future ongoing filings. So issuers need to consider all of this, the whole trajectory through the SEC, exit, trading from the beginning, and decide how they want that their life to be shaped.
But doesn't the regulation shape that for you? I mean, if Sherry bought my securities, she bought them and it's free and clear. She's got no restrictions other than I may not give her an off-ramp. But if nothing is preventing her to go and find a buyer on her own, right? I mean, that's what's happening basically now. So like I've been conflicted with a few clients who say, well, Oscar, we don't really want to, then I go, then why are you building an environment where they can actually do that? Mm-hmm. I mean, are you not really, yes, but we're just letting them meet. Well, it doesn't matter whether you let them meet or not. It's still like, I'm trying to find I treat it more like when is the right time to bring it up? And it almost seems like to me, how we used to wait to bring the broker-dealer after the filing was done. Now we know that to do it right at the filing. We used to say the escrow provider or all the other stuff we would wait. We're now doing it way in the beginning. How do you feel if we started bringing that into the equation right at the beginning, saying, look, you're going to provide that. Why not have it part of your strategy? And that way it's all taken care of. Or do you feel that that's putting them under the pressure gun that these securities will have to be? I don't know. I'm just spitballing here right now.
It's going to be different for every single issuer, and it's going to depend on their own professional advisors as well. I mean, the brokers who bring them to the market might say, we think you should stay private for a while, truly private with no secondary trading. Others are looking for a market immediately. So it's really going to depend on what the company wants out of this and what their professional advisors are telling them.
Okay. And Sherry, from your end, I mean, we're looking at, you're doing some primaries to see what it's like, but also doing the secondary. So how do you feel about that? Obviously, from a secondary market, you want people there right away.
Of course, of course we want people there right away, but we know that there are going to be some reasons that are going to temper the secondary market. So for example, if you're doing a primary raise, you're not going to want to compete with yourself on the secondary market. So we can securities and we have other protocols in terms of how we can deal with issues around that. So we're very used to working with issuers on those items.
Okay, so that's part of the. So basically, the secondary market is not just acting like a true stock exchange where it just gets listed. It's on 24/7. Here, right. You're working with the issuer and understanding, so to put the brakes on when needed in the environment. We're probably going to have more of these discussions, right? There are a lot of different questions thrown at us on a daily basis. We're demystifying what ATS, secondary market trading, is. I just got invited to one 24/7 secondary market trading. I couldn't believe when I saw 24/7 secondary market trading, because clearly, you go and see who the operator is. They're not there yet. But so I look at that and I see how it gets amplified, and it makes our jobs harder. I know, Sarah, I put you on the hot seat today, and I'm grateful. And Sherry, for you at Rialto, I mean, for us, we're all working together, all of us in this ecosystem to bring an off-ramp. I say I'm not using liquidity anymore because it isn't liquidity. I want to make sure we're also very clear here that the secondary markets are not liquid. They're liquid is NASDAQ. That's a liquid market. These are illiquid markets. This gives the investors the opportunity to off-ramp themselves to potentially monetize. But this is a legal venue, a fully compliant venue to do it in. And but you need to make sure that these other components are met with part of your regulations. And obviously, a lot of you are going to have a lot of questions today. I'm sure, based on the emails that I'm getting, you're going to be asking, so where do you get a hold of Sarah? Very simple. To get a hold of Sarah, you just go to KoreSummit.io under speakers. Her name is there. And so is her email address. That's right. We don't hide anything. And then, of course, if you want to reach Sherry to talk to her and her team regarding secondary market trading and how your company could use it either for Reg D, Reg A, or Reg CF, go speak to her. Find out what the requirements are. What this is a fully compliant. Today was a bit of an education on Blue Sky. I think we just scratched the surface of it. I mean, in big discussions, but hopefully it created a discussion point that you should ask. You got two great individuals here that are living it every day, and hopefully. So any last words, Sherry, from you first to everyone that's listening from Rialto's point of view in secondary and Blue Sky?
I just wanted to thank you, Oscar and Sarah, for Oscar for putting these together, and Sarah for coming on, just because I think it's so important to have the education component. There is so much out there right now, especially, and it's really a lot of marketing. And so I think the education component is just so critical. It can't be stressed enough. So thank you for taking the time to put these together and make sure that people get the education that they need in this market. Those are my last words.
Oh, wow. A thank you note. Wow. Sarah.
Yeah, I'd like to say thanks too. And also, don't mess with Texas or any of the other states. You can't ignore them.
See, I like that. Don't mess with Texas. I like that. See, she said it. It's something that needs to be said as a warning to everybody. And I think I'm going to say something that her words were done before. regulators are paying attention. They're watching social media. If you didn't see it, the SEC just caught an individual using Twitter on one of these pink sheet or whatever it is. They're monitoring everything. So don't think for 1 minute that they do not know what you're doing. You want advice? Please speak to the experts. Thank you again for both of you. This conversation is just getting started. I want to say that, just getting started. And I want to thank both of you today. For everyone else, we will see you at the next one, 4:30 this afternoon. We're going to talk about rule section 12G. And yes, we'll talk